control. Chapter 7 of our material, internal control. So we'll be looking at some highlights of this topic, which you can see has been displayed on the board. We'll be looking at some highlights of this topic. We'll be looking at importance and definition of internal control. We'll be looking at the components of internal control. This is the most important aspect of this topic, the component of internal control. We'll be looking at the limitation of internal control. What are the recording of internal control system that the auditor will need to take into consideration when looking at the internal control. We'll look at the evaluation of control and audit risk assessment. We have done that. And we'll look at the last aspect is the risk of specialized IT system. And when we say IT system, it means information system. So let's move now and let's look at this topic in details now. So we'll be moving into the meaning of internal control. What's the meaning of internal control? So internal control is a process. Internal control is a process. We are looking at the meaning of internal control. Internal control is a process effected by an entity board of directors. You can see by the entity board of directors, the management, and other employee. Can you see? It is a process that is effected by the board of directors, by the management, and other personnel, designed to provide reasonable assurance regarding the achievement of objective in the following category. We have effectiveness and efficiency of operation, the reliability of reporting, the compliance with applicable laws and regulation. Now, we can see from that definition that the internal control system that will be put in place is not the responsibility of the auditor. Is the responsibility of those charged with governance. That means the board of directors, the management. Now, that's why you see that in governance, one of the components of the board, or one of the components under the board of directors, like committee, you have the audit committee. We have the audit committee, and that audit committee will also be responsible for the risk management in the organization. So internal control is a process effected by the directors, by the management, and other personnel, designed to provide reasonable assurance regarding the achievement of objective in these following circumstances now, or in this following category. We have in how effective or efficient is the operation, how reliable is the reporting now, and how are they complying with the rules and regulations. This is the definition of internal control now. Let's see how the auditor uses internal control. How did the auditor now we have stated categorically that it is not the responsibility of the auditor to ensure or to put in place effective internal control system in place. From the definition of internal control, we have been able to establish that it is the responsibility of those charged with governance. That means the directors and the management, because the director will actually delegate their responsibility to the management, but it is the responsibility of starting with the responsibility of the management before the management now. How the auditor is going to use internal control now? Don't forget, again I repeat, it's not the responsibility of the auditor to put internal control in place in an entity. It's the responsibility of those charged with governance, or the directors, management, or other employees in the entity now. Now, how the auditor uses internal control now? sometimes the auditor wants to rely on the work of the internal control now. Now, the auditor may want to rely on the work of the internal control. Sometimes the auditor may have an assumption that if there is effective internal control in place in an organization, that means if there is effective internal control in place in the organization, the transaction that has been processed in that organization will be correct and will be properly accounted for. So if it is properly correct and accounted for because there is strong or effective internal control in place in that organization, that means the work of the internal control now, the auditor can rely on such work. That is how the auditor make or uses the internal control. Now, he can rely on the work of the internal control that transactions are properly accounted for or are recorded in appropriate way. This is how the auditor uses internal control. And in this, if an auditor wants to use the internal control in an organization, he wants to rely on the work of the internal control, that he believes that the work that the internal control has put, the control that has been put in place, the transaction that has been recorded has been is properly recorded and has been accounted for properly now. That means if an auditor is using this approach now, we call it audit strategy or audit approach now. It is called system based approach. System based approach is when the auditor rely on the work of the internal control in an organization. He rely on the work of the internal control in an organization now. So when an auditor rely on the work of the internal control, that means his audit approach now is based on the work that the internal control has put in place. This is how the auditor rely on the work of the internal control for a particular audit now. So we can see how auditor rely on the internal control in an organization now. That means when they are performing system-based approach, the auditor will have tested that the internal control that the entity has put in place or that the entity is using is effective. And because it's effective, the auditor will assume that the transaction that has been processed by this control mechanism is that the process by this control mechanism is actually can be relied upon, and the audit risk in this, the control risk, don't forget we have three types of risks. We have inherent risk, control risks, and the detection risk now. That means if the control is effective in the organization, that means the control risk will be is reduced, is low. And if the control risk is low, that means the impact of risk in the financial statement will be very low in the financial statements now. So let's move now. Let's look at the summary of audit approach, test of control and substantive testing now. Test of control and substantive testing. I will quickly summarize this now. That means the summary of audit approach now. The audit approach now. We'll be looking at mainly on substantive test and on system-based approach. I've explained system-based approach for us. That system-based approach is when the auditor is relying on the work of the internal control now. Is relying on the work of the internal control, and the auditor can only use this approach when the internal control is effective or is strong. That means when the internal control in an organization is strong, so the auditor can rely on the work of the internal control or can base his audit work now will be based on system-based approach. Don't forget, system-based approach is only used when there is effective internal control in an organization now. Let's look at it now. Let's look at how to. Substantive is you testing a large number of transactions or items in the financial statement. And this is because most auditors use this when there is when the internal control in an organization is quite very low, is low. So if it is low, the auditor will option for substantive testing, and substantive testing is when the auditor is testing majority part of the item in the financial statement now. So we need to test all the transactions, or majority or large number of transactions in the financial statement, because they can't rely that the item that the transaction that made up that item cannot be relied upon, because the internal control mechanism that the management has put in place is not sufficient enough to detect or to rely upon. Now look at it now. When an auditor wants to use any approach now, whether he wants to use the substantive test or a system-based approach, now the auditor will plan the audit. That's it. We will need to plan the audit and look at the risk assessment. Now, if the auditor plan an audit during the planning and during the risk assessment, I mean, wants to know the risk that is involved in this audit that will make him to give an inappropriate opinion or wrong opinion about the audit now. So by the time he's doing that now, he will need to assess the internal control that the organization has put in place. So if the internal control is weak, automatically he will carry out substantive testing, and the substantive testing will be extensive. That means the substantive testing will be so much, it will test all majority part of the item in the financial statement. So when he's carrying out the test and discover that the internal control is in place, system-based approach is not appropriate. So automatically you will go for substantive testing, and that substantive testing will be so intense. Intense means that it will be majority part of the item in the financial statement that the auditor is going to test. But if during the assessment now, the auditor discover or assess that the internal control is strong, the auditor will not just stop there. It will need how to carry out what we call test of control. Test of control is because by the time he's assessing it now, the internal control may look well in paper. That means it may look strong in paper. For the auditor to be sure that the internal control is strong or is effective, he will need to carry out a further test, and what that test will cause is what we call test of control. Now, if the auditor discover that the test during the test of control now, that the internal control is actually strong or is strong, that means the auditor will carry out audit testing that is reduce substantive testing. It will not be substantive testing. It will not test all the item in the financial statement. It will just set some selected item in the financial statement. But if the auditor discover that after the test of competence that the internal control is weak, automatically we carry out a large number of substantive testing, and that will call extensive substantive testing. It will carry out that. So this is the summary of the audit approach when we are looking at test of control, and substantive testing. So let's go to the components of internal control. Let's go to the components of internal control now. Components of internal control. So we have 5 components of internal control. We have 5 components of internal control. This is where we are now. We have 5 components of internal control. You may be asked that you should list and explain 5 or identify 5 components of internal control that is identified by International Standard 315. So let's look at it now. We have the control environment, we have the entity risk assessment process, we have the information system, we have the control activities, or you call it the internal control himself, we have the monitoring of control. We'll be looking at this one after the other. So that's what we'll be looking at, one after the other now. So let's go to the first component. First component is the control environment. What do you mean by control environment? Control environment is the general attitude of the internal control of the general attitude to the general attitude to internal control by the management and the employee in the organization. Now, what attitude do they have? Don't forget that I told you when we started that the responsibility of internal control mechanism in an organization is the responsibility of the management now, or the board of directors. That means if the board of directors does not actually have the attitude of ensuring effective internal control in an organization, what will happen? That means automatically the internal control in that organization will be very poor. These are the components that the auditor will need to look at to enable to examine whether the internal control in the organization is strong or is ineffective, whether it's effective or ineffective, or strong or weak. That means if the attitude of the management is poor towards the ensuring internal control in our organization, that means you will know that the internal control in that organization is very poor. Now, you know, the auditor will look at what are the view, because nothing the internal auditor can do if the management does not have the view, or the awareness or action does not have the view, or does not take action, or is not aware of ensuring effective internal control in the organization, in an organization. That means the internal control in that organization will be very poor. So this is the control environment in which the auditor will look at now. These are the so let's look at the second component now. The second component is the entity risk assessment processes. The entity risk assessment processes. Now, if an internal control in an organization is strong, that internal control will be able to identify, to assess, and manage business risks in an organization. That means if that control cannot identify business risks or risks, cannot identify risks, or cannot evaluate risks, or cannot manage risks, you will know that the internal control in that organization is poor. It's poor. So now, the entity, that means the internal control that has been put in place, must be capable of recognizing the existence of risks in an organization. What are the potential risks? What are the potential risks? What are the business risks in an organization? What assessing the impact of that risk and the frequency of that risk, or the likelihood that that risk will occur. That means if the control that has been put in place by the management is able to do that now, that means we can say that the internal control mechanism is strong. And if it can't do that, if the control cannot identify, cannot manage, or cannot evaluate the impact of risks, of business risk that the organization is, because these risks will have an impact on the financial statement. We have an impact on the financial statement. Now, look at this now. Look at this. I'll read this out. It said the quality of risk assessment and management processes within the entity client can be used by the auditor to assess the overall level of audit risks. If the management have no such processes in place, the auditor will need to do more work on the aspect of the audit planning. That means if the risk assessment processes, the entity risk assessment process is not put in place, and if it is not put in place, the internal control can't be effective. The auditor cannot rely on that internal control. And if the auditor rely on the internal control, that means the auditor now will be exposed to what? An higher level of audit risks now. That means if there is no audit, if there is no risk assessment processes in place, don't forget that during when an auditor is planning the audit, which we have done, that the auditor will need to assess the audit risks in that audit now to know the level of audit risks. And don't forget that I told you that audit risk is the risk that the auditor will give a wrong opinion or improper opinion, opinion opinion about a particular what audit now. So we look at that now. So let's look at the third component now. The third component is the information system. And the information system consists of the infrastructure, whether hardware or software. It's whether physical or hardware. Infrastructure, software, people, the procedure that has been put in place, and the data that is used to what to that means the input, the data that is used to generate the information. Now these are the five subcomponents in information system. Now we have the infrastructure, whether physical and hardware. That means the infrastructure, the software that the entity is using, the people that is using that software or that is using that infrastructure. Now we have the procedure that has been put in place. What are the accounting procedure that has been put in place? Is it Accrual concept that we're using or cash basis that we are using? And the data that we are using to generate the information. This is what makes up the information system now. This is what makes up the information system. Now, this information system now, the auditor, this infrastructure, this information system now, the auditor will need to have an understanding. Are you getting it now? He will need to have an understanding, because if the information system are not properly put in place, or there is any absence of this five subcomponents of information system is absent now. That means there is no effective internal control that is put in place, and there's high tendency that the information that is provided in the financial statement is not properly accounted for or properly recorded now. Because look at it now, if the persons, don't forget I told you that people is there, the people that are generating the transaction now, or the people that are recording that transaction now, are not well trained person, or is unqualified. That person is not qualified, or does not have the skills or the integrity to perform such a work. Now what will happen? That means the information now that they will be using or that they will be processing, that means it will be wrong. And that means let's say inventory now. Inventory is measured at lower of cost or net realizable value. If that person is not a shadow accountant or someone that is versatile or that has a knowledge of the accounting standard, it will just be recording the inventory anyhow. And if it's recording the inventory anyhow or as a fee, that means it's going to have an impact on the financial statement, and this can cause risks to the auditor, because if the control risks that the organization needs to put in place for the information system is quite high, that means the audit risks will also be right now. That means in this aspect now of internal of the information system now, the auditor will need to identify and understand the information system now. He will need to understand it, and in understanding it now, the auditor will need to understand what are the things that the auditor will need to understand now. The auditor will need to understand the entity principal business transaction. What are the principal business transactions? The auditor will need to know that. How this transaction and events are relevant to the financial reporting now. The auditor will need to identify and have understanding of it. The auditor will need to understand the processing method that is used in the organization. Is it manual? Is it computerized? The auditor will need to look at that now. Is it manual? Is it computerized now? In a company now, when they are using software, or when they are using let's say paperwork to prepare the financial statement, one of the components will be missing, and that component will be software, because the organization is not using software now. But if the organization is using software for their accounting processes, the auditor will need to gain understanding on how that software is work and how transactions are applied to that software. Now the organization will need to look at that. Now the auditor will need to look at the accounting records, both manual and computerized, that will be used to support those figures that is in the financial statement. He will need to look at that. The auditor will also need to identify the processes that led to the preparation of the financial statement. The auditor will need to look at that, and that is the third component of the of internal control. We have looked at the control environment, the entity risk assessment processes, the control system. Now let's look at the fourth aspect, which is the control activities. And I say that this is the internal control himself now. So let's look at this. When we say control activities now, it means the policy and the procedures. The policy and the procedure that the entity has put in place to ensure that the objective of that organization is achieved. What are the policy they have put in place? What are the procedure they have put in place to ensure that the entity objective is achieved? Just look at it now. An organization have an equipment that they are using for their for the production of their goods and services. Now, if that asset is not well protected, or there is no procedure on who can use the assets or who cannot use the asset, what happen? That means if everybody is allowed to use the asset, it may be the asset may be used by wrong set of person that does not have the skills or the required skills to operate that system, that machinery or that equipment now. And if it breaks down, what happen? The organization will not be able to produce, and if they are not able to produce, they will not be able to sell, and if they are not able to sell, they can't generate revenue, and if they can't generate revenue, that means the company will be running at loss. Now that means, don't forget that control activities are the policy and procedure put in place to ensure that the organization achieve their objective. Now let's look at it now. Any questions so far? So let's go through we are in control activities now. So let's go, because in the exam they may actually ask you to list types of control activities. You may be asked, I'm in page 160 now. You may be asked to state the types of control activities or types of internal control. Please look at it. Let me read that aspect for you so that you will see it. It said International Standard 315 categorize internal control into the following types. In the exam, if you are asked to suggest suitable internal control within a given system, this list will provide a useful checklist. I will read again. International Standard 315 categorize internal control into the following types. In the exam, if you are asked, I'm in page 160, it said if you are asked to suggest suitable internal control within a given system, they will give you a system, they can give you a scenario, and they can ask you to suggest the internal control that can be put in place. Now they said this following checklist is important. Now so let's look at the category of internal control and the types of internal control. Category of internal control or types of internal control. We are here now. So we have performance. So I will list it. We have performance review. Two, we have information process. information, we have information processes. 3, we have physical control. We have physical control. 4, we have segregation. Segregation. We have segregation of duty. 5, we have segregation of duty. So we have so let's continue now. Hope you can hear me. Can you hear me? Hello? Okay. Now let's go now. So if you are asked to list the category, don't forget we are still in control activities. The category of control activities or types of control activities. Don't forget we have. So let's look at let's look at this one after the other now. Let's look at this one after the other. So we have performance review. What do you mean by performance review? Performance review, they are review or analysis of the actual performance against the budgeted. Now, this is when the management, this is what normally the management use. We call it management control. Performance review can also be called management review control. This is when the management now, or when they compare the actual with the budgeted now. Like last week now, I think last 2 weeks, I was actually preparing the budget performance for my boss now. And there was transaction that was omitted now in a particular cash book. So when I forwarded it to him, instantly he says that this report is not correct. This report is not correct. I said it's correct, sir. So I said, okay, let me go and check later. I discovered that there was some transaction that was omitted from the check register or from the cash book. When I was preparing the cash book, there was a transaction that was omitted immediately. Now, why were we able to determine or to know whether there is an omission in the cash book now? Why? Because of performance review or management review. You review that, okay, what I've approved this month now, there are some big transactions that have significant transactions that I've approved this month, that this actual figure should be more than this. Are you getting it now? So review performance is when include review and analysis of the actual performance against the budgeted now. And I told you that it can also be referred to as management control. He said this include supervision by management by the work of the subordinate now. Can you see? By the work of the subordinate. Just like the instance I gave now, I performed a work for my boss, and the boss was able to look at it and see that there is an error in this report now. So it is used to perform, or it is used by management to review the work performed by their subordinates now. Am I communicating now? So let's go to the second category or types of internal control. We have information processes. This information processing is the control that is put in place to track whether an information is complete, whether an information is accurate, or whether an information is, or a transaction is authorized now. Don't forget, information processes is used to check whether an information is accurate, whether it's complete, and to check the authorization of a transaction. It is not all document that is forward to my boss now, which is the director of finance now, that will process. We need to confirm the authorization of that transaction now. Is it truly approved by the chairman of the organization? If not, it's not approved, that means you can't process it now. These are what we call the information processes. And information processes is when control, that means the control that is used to check the accuracy of transaction, or of a time, the completeness. Is that transaction complete? Is it complete? And the authorization of the transaction now. Now let's look at physical control now. Physical control. This is the control over the physical security of asset and record. That's when you have security at the gate, checking people, checking maybe opening. You need to open your maybe your boot to check your car now, to check whether whether the company asset is not being taken out of the premises now without authorization now. These are the control now that the organization will need to put in place over the asset and over the record. The record that we have, is it properly secure? The asset that we have, is it properly secure? Can we prevent unauthorized persons from using the asset now? Can we prevent them? These are the control. Don't forget, these are the control to prevent unauthorized use of an asset or record now. And don't forget, is also this physical control can also be used to prevent theft and to prevent damages. Because if you prevent unauthorized use or unauthorized users from using a record or an asset, it's going to prevent theft and damages now. So let's go to the last, is segregation of duties. Segregation of duties say that when one person, that means the same individual, should not start a transaction and also perform the transaction throughout. Just look at it now. The same person will record the payment voucher. The same person will write the check. The same person will take it to the bank. The same person will record it in the financial statement now. That means duties should be shared. In authorizing and recording transaction, the duty should be shared. Am I communicating now? So segregation of duties, this is a control that involve assigning different persons or different people with the responsibility of authorizing, recording transaction, and maintaining the custody of an asset now. That means it is not the same person that will record. It is not the same person that will process the transaction. It's not the person that will prepare the financial statement. That means different set of people should do this now. And the reason why this segregation of duties is very important for as one of the category of internal control is that if different persons is performing different tasks or responsibility on a particular transaction now, that means if an error should occur, it will be very easy for one of them to identify it now. Just imagine one person in a unit now, in a particular unit, doing all the work. For him to detect whether there is an error that has occurred during the process of processing the transaction or recording the transaction, it may be difficult. But when it is performed by different set of people, it will be very easy to identify, because what you cannot see, another person can see it. What you does not observe, another person may actually. Also, it can be used to prevent fraud. To prevent fraud. It is easier for one person, when one person is performing all the tasks that are involved in the transaction, it will be very easy for the person to actually conduct a fraud. But when it's being performed by different set of persons, it may not be that easy now. So let's look at this. Let's quickly look at this. This illustration now. This example about control activities. Don't forget that they told us that you may be asked in the exam. To suggest suitable internal control within a given system now. And don't forget that we are saying that what we have listed as checklist may actually be important for you to develop an effective internal control a system now. So let's look at this example quickly. In page 169, he said, let me read out. He said, one part of the sales system at Dulari, one part of the system of the sales system at Dulari operate as set below. Orders are received by telephone. One receipt of an order, a clerk enter the details into the system. B, the system check that the goods are available. If not, a dispatch note is provided and email to the distribution center. Distribution center staff pack the goods and dispatch them with 2 copies of dispatch notes. On receipt of the goods, the customer signs the dispatch note and 1 copy is returned to the account department at Dulari. The account department flags up the dispatch notes on the system to indicate that the goods has been delivered, and the system automatically process an invoice and email it to the customer now. An exception report of on invoice dispatch note is produced weekly. He said require. Set out an example of each of the above 5 types of category. 5 types of category. 5 types of category of internal control activity set out in international standard on audit 315, as they may be operated in Dulari system now. So who can try? So now, since we have looked at the scenario now, so we have to look at this category of control that Dulari system can put in place now. Don't forget, performance review. Performance review can also be called management review. And the management should compare the budgeted sales with the actual sales, so that to detect whether if there's any significant sales that was not recorded now, it can easily be detected now. So they should do that on a monthly basis. So let's go to the information system. Sorry, I forgot to mention that the information system now we are talking about, we can have application and general control. Application control and general control. And don't forget, they are using what they call, they are using a software now. Now, the general control now should be, what are the inputs or outputs? What are the inputs? What are the information that are inputted into the system now? And what are how the system process that input now into an output now? That means the information processes now for application is that manual follow-up of the exemption report of on invoice dispatch note now. You know they have on invoice dispatch note now. That means those that are not invoice now. Those that invoice are not provided for when they are actually putting it into the system now. You know, the system, they have inputted the dispatch notes, they have inputted it, they have flagged it to the system, but the system do not provide an invoice. And that invoice is what they will be sent to the customer through an email. That means all those ones that are not invoiced now, all those dispatch notes that has been flagged into the system, but the system fails to provide an invoice for it, there should be follow-up for that now. The general one is that, you know, let's go to the general IT now. They say control over the development or testing of the sales system. Don't forget what we are concentrating on now in this scenario is sales system, because that's what they are using now. Sales system is to ensure that it leads to accurate processes. Accurate processes. That means the sales system we are using, that IT system we are using, are they providing? Are they? Is it working properly? Uh, is it ensuring accurate processes? Is it working the way we have the way we want it to work? This is the control to look at now, because if they are not working the way it used to, that the organization is intended to be used for, that means they may actually be changing to it. There is a way that the employee may manipulate, those using it now may manipulate that system, and that system may not be working the way it should be working now. That means let's go to the physical now. Don't forget, physical we say control over the that means the control over physical security of an asset or document. But in this general asset now, we are looking at document, the data, because all those information that is being processed in that system, it will be going to a master data now. Is that master data, is it well protected? Did they have firewalls for it? If it's not well protected, that means files, data about all the sales transaction may be lost, and if it's lost, that means the organization is in trouble now. They say access control over the sales price master file, such as access only be possible via a password. That means there should be a password for you to that will enable you to have access to that information now about the sales transaction in the organization. And this access password should only be given to the sales director. So the sales director should be the only one having the access, the password access to this control now. Segregation of this we have talked about is that flagging, taking an order, placing the order, dispatching the goods, and flagging of the dispatch note now should be done by different individuals now. So let's go to control now. So let's go to control, page 162 now. Let's go to control in IT system. What are the control you can put in IT system? IT means information technology. We have what we call general control, and we have what we call application control. So what's general control? What is application control now? That's what we'll be looking at now. So in general control they are the policy and the procedures that relates to different application now. You know, in an organization you may be having different application. That means the application or the software that you are using for your payroll may be different from that you are using for your for your sales. It may be different from what you are using for your payables. It may be different from what you are using for your receivables now. Those applications now, that means the policy and the procedure that you put in place to cover all these applications now in one. That's what we mean general application now. An example of general application now, let's look at the example of general application that we have, or category of general, category of general control. I told you control now, we have internal control in an IT system. Internal control in an IT system can either be what? General control and application control. And I told us that general control is the policy and the procedure that is related to different application or to different software now. Those control that you put in place now, that you need to put in place to cover all the application you are using. When an organization is using different application, like in my organization now, the application we are using for our revenue is different from what we are using for our payroll. What we are using for our stamp duty is different. What we are using for different activities now in our organization is different now. That means the control I will put in place to ensure that there is effective internal control system put in place now. Those are the what we are looking at now. So example of the category of general control now. Let's look at it. Control over the development of the new computer information system and application. What are the control that you have put in place if you want to develop an information system or application in that organization? Now, what are the control? Now, we have B. We have control over the documentation and testing of changes to the program. That means if you want to change the program now, what are the control that you need to put in place? Who are those that will authorize that change? Please, you can look at the example, major example under each of these. You can see it in page 163. We have control to prevent the use of incorrect data file or program. So what are the control that you need to put in place to ensure that incorrect data are not put into or are not inserted into the system? What are the control that you need to put in place to prevent unauthorized amendments to the data system? Anybody can just authorize or can just go into the system and have access to the system and just do some transaction without anybody knowing now. What are the control to ensure that there will be continuity in the computer system? The control that you need to put in place. What is it? Firewalls? What are those antivirus that you need to put into the system to ensure that the system continue to operate? What are the backup system that you need to put in place? Please, you can see this one in page 163, 164, and 165 because we can't look at it in details now. So I'll summarize. So let's go to the application control. So internal control in an IT system. IT means information system. That means when an organization is using computerized based system for their accounting processes or for their accounting for their financial reporting system now we have application. Now I told you application is the policy and the procedure that is used in processing the individual application. I've told you that general is applicable to all. They are the control that you need to put in place that will cover or that is related to all the application that the entity is using. That means application now, control now is applicable to that, is related or applicable to how transaction will be processing on that application only. That means the payroll now, that means the control that the organization have put in place that is only related to what? To the payroll system now. That's application. It's not for all now. Now category of let's look at the category of application control now. Let's look at it. We have the input. What is the input? What are the things that are inputted? Is those information, is those data that are inputted, is it complete? Is it accurate? Is it authorized? This is what you need to put control in place now. The processes control. You look at the processes control. In the process control, we are going to look at that later. The control over the master data and standing order. Please look at this. Look at this. You can look at that later. Now let's go to page 169 now. 169. We have control weaknesses and the exam. In your exam now, you may be asked to identify the weaknesses in an internal control now. How you be able to identify, because you may be given a case study scenario and you may be asked to identify the control, to identify the weaknesses in this control now. Look at it now, page 170. I will read so that you see what I mean by that now. They said the exam may include a question based on the case study in which you are asked to comment on weaknesses in the control of an entity in a client entity. You may be required to identify weaknesses and explain why there are weaknesses and the nature of the risks that they create, and suggest improvement in the control to remove the risks now. That means in the exam, they may give you a case study scenario and ask you to identify the weaknesses and explain the weaknesses, explain the nature of the risks that they will create. Is it inherent risks? Is it control risks? Is it detection risks? You are going to explain the risks that they have created, and also make suggestion to how to improve on, or to how to improve the system now to make it strong. So you may be given a case study scenario in it now. Now, how will you be able to find the weaknesses now? What are the things that you need to look out for when what you need to look out for when identifying the weaknesses in internal control system now? You need to look at the control environment. I told you the control environment is the attitude of the directors, the attitude of the management, and the attitude of the personnel now towards internal control in an organization now. That means if their attitude are not if the attitude, or there is no awareness process, or value is not placed on internal control now, that means the internal control system will be weak, because those charged with governance or ensuring, don't forget I told you that it is the responsibility of the management or those charged with governance to ensure effective internal control in an organization. That means if they don't place value on internal control, and if there is no awareness on the internal control, or there is no culture of internal control in the organization, that means the internal control will be weak now. Now, other things you need to check for is the lack of check and control. If there is lack of check and control, that means there will be weaknesses now. That means if the work of one person now is not being reviewed, is not being checked, I perform a work, I just transfer it immediately, record it in the transaction now. That means if there is no supervision, there is no review of a work that is being performed by individual in that organization, that indicates a weak internal control system. While segregation of duties, when one individual is the one performing all major transaction or different or multiple transaction, it means that indicates a weak internal control in an organization. If there is no physical control over the asset or record or in that organization now, they didn't put in place physical security over the asset or control, is a weak internal control now. That means personnel too, those performing the work in that organization, if they are not qualified or inexperienced person is the one performing the work, it means there is weak internal control now. And now I've explained management structure and organization structure now. That means there is no supervision. There is no supervision of work performed by subordinates. Is an indication of weak internal control system. If there is IT now, that means if that organization is using computer-based system now, and the IT control are not put in place. I told you that we have two types of IT control. We have general and application control. If they are not in place, if they are not put in place, it's the indication of weak internal control system now. We have computational works. That means if there is no processes of checking arithmetic accuracy of figures that has been uh, uh, accuracy of figures now, maybe some, let's say different transaction. Now let's say this is 1,000, transaction A, transaction B, transaction C now was actually done. This is 2,000, let's say this is 3,000, and this is 1,500 now. Let's say this is 3,000, this is 6,000, this is 7,500. The total should be 7,500. It may actually be recorded as 7 or like 9,500 now. That means if there is no one to check the computation now, whether there will be computation error, there is no one to check it. That means there is an indication of weak internal control mechanism, and this is what the auditors normally do now. They will check the individual transaction and analyze it together and see whether it's tally with the individual with the summation now. When there is lack of internal audit in the organization, is an indication of weak internal control mechanism. Any question on this? Any question on this? Any question? So let's go to the limitation now. Let's move to the limitation of internal control system now. What are the limitations of internal control system? That's what we want to look at. Limitation. One of the limitation is human error. Human error in internal control now. Yes, human error. Human error may result in incomplete or inaccurate processing, which may not be detected by the internal system now. There may be human error that the system will not be able to detect sometimes. So these are, even though the internal control is put in place, there may be human error that may happen. It's also not cost effective. That means putting control in place now. The company will need to get security. We need to employ someone that will check for the processes or the procedure are well followed. It's not actually cost effective. The organization will actually incur a cost in putting internal control in place. So it is costly because it is not cost effective to put control in place now. Now, there are some control that the organization now that has been put in place that may be override by the management or by some individual in the organization now. Look at it now. Example now, let's look at it now. Let's say there's a event that is happening, and let's say one of the boss in your organization now need that transaction, need that money within an hour now. And for you to process, maybe the auditor will need to look at it, review it, check it, and all these things now. Because they will know that they can't meet up with the deadline. They will just write the check and just take it to the bank or process that transaction without proper review now. That is one of the limitations of internal audit too. They say even when control has been put in place, it may be ignored or override by the management, because it's the management that ensures that the internal control mechanism should be put in place, so they may override it. There may be collusion. Collusion is when we say there should be segregation of duties now. Two or more persons may collide together to perform a fraud, which the internal control mechanism or internal control system may not be able to detect. So collusion, when people coming together to perform a fraud, it may the internal control may not be effective to determine or to detect such a fraud now. Don't forget, we told you that human error, human error, which may result in incomplete and accurate processing, which the internal control may not be able to detect. We talked about that internal control may be very costly. That means it is not cost effective. We say that one theory is that the control mechanism that is put in place may be override by the management or by some employee. Collusion now may not make the internal control to be effective when two or more person is coming together, even though when you have put in place segregation of duties now, two or more persons is still coming together to actually perform a fraud, may not make the internal control to be effective now. So let's go to, before I think some people are leaving maybe because of the time now. So let's go to recording now. Maybe we just stop there. Let's go to recording internal control system. Recording internal control system now. When we say recording internal control system, we are saying that how the auditor should record the internal control system in place now. That's where we are moving into now. Recording internal control system. Now, in this recording internal control system, I've told you that the auditor will need to know whether the internal control is it effective or not. Can we rely on it now? During that, the auditor will need to record whether the internal control is actually effective or not, or when testing the component of this financial of testing this control of testing the control internal control, it needs to record whether the internal control is effective or not. Now you need to document it properly, whether it's effective or not. Now he said recording method. There are principal method available to auditor for recording internal control system now. That means if the auditor wants to record the internal control system now, whether documenting the internal control system, whether the internal control system is effective, or what are the risks that is in this or when evaluating the internal control system now, you will need to record it, that evaluation. You will need to document what the findings he has come across in testing the internal control. We need to record it now. Now, there are principal method available to auditor for recording internal control. We have narrative note, we have system flow chart, and we have questionnaire. What do you mean by narrative note now? Narrative note are written description of the internal control. That means written description. You just write in, okay, this is not put in place, these are put in place, this is not strong, this is weak. They are written description of the internal control system. Narrative now, there are written description of the control system and the control that have been put in place. What are the control that has been put in place? You record it. So one of the disadvantage of this is that of narrative notes is that it may be very lengthy, it may be very long, so that's one of the disadvantage, and it is time consuming. It is time consuming when preparing now we have system flow chart. System flow chart is when you are doing a bus like this. You write, okay, perform the transaction. From there, review the transaction, maybe using representation. That means it provides a representation of the accounting system in a form of diagram. Now look at it now. Let's say you said okay, the customer, this one, when the customer, let's say customer demand, when the customer demand, you produce. You get what I'm saying now? You produce. When you after producing, you now these are representation. That means system flow chart now provide a representation of the accounting system in the form of a diagram now, in a form of a diagram, in a form of a diagram. That means the auditor will now prepare this diagram now to record the internal control mechanism that has been put in place. It may be triangle, it may be, so the auditor will, instead of using descriptive written description now, you will use a diagram to explain or to record the internal control system that has been put in place now. Maybe when the customer demand, the order is reviewed. When the order is reviewed now by the one of the supervisor now, the order will now be placed. Now there will be voucher that will be signed by the customer that the goods has been received. That voucher now will be cross-checked by the, it will do it in a box or in a diagram, in a diagram form to show how the transaction where how the internal control, explain how, or to record the internal control that has been put in place in the organization now. Now let's go to the third aspect, is questionnaire. Questionnaire now, when we say questionnaire, questionnaire is a list of questions now. There are list of questions about the control in a particular aspect of operation or accounting now. That means the auditor will prepare a list of questions now, and this list of questions will be about the control that the organization has put in place, and this list of information will now be used, list of questions now that has been prepared by the auditor now will now be used to what? To determine whether there is effective internal control mechanism in place or weak internal control mechanism that has been put in place now. Now let's now go to types of questionnaire. I told you that questionnaire is a list of questions about the control in a particular accounting system or operational. So let's go to types of questionnaire that the auditor can use to record the internal control now. So let's go to the type. We have types of questionnaire. We have the internal control questionnaire and we have the internal control evaluation questionnaire. So what do you mean by the internal control questionnaire? This internal control questionnaire is designed to establish whether appropriate control exists. Don't forget, internal control questionnaire, which is called ICQ, is used to establish whether a control is, whether an appropriate control exists. Is the control exist? And if this control exists, does it meet the specific control or objective that the organization has put in place? This questionnaire will show what? Will show yes. That means you develop a question. Let's say, look at this now. Example of this now. Is that this questionnaire now, let me just, before I go to that example now. ICQ now are usually drawn in a way that a yes answer to a question indicates a strong what? A strong control. That means a control strength. A no means a control what? Weaknesses now. That means in internal controls questionnaire now, don't forget that the questionnaire is used to what? Is designed in a way to establish whether an appropriate control exists. An control that exists, is it an appropriate control exists, an appropriate control that can meet the specific objective that has been set. Now don't forget that I told you that when in this internal control questionnaire now, yes means a strength control, a control strength. That means strong control mechanism is put in place. No means a weak control system. That means a weaknesses in the control system. Why? Yes means strength in the control system now. Now, example of this is that, look at this now. Credit reference taking and potential new customer, are credit limit set for customer are credit limits set for customer? If yes, that means, can you see now? If you say are credit limit set for customer, if you say yes now, if credit limit are set for customer, that's a good a control strength. That means a control strength. That means a good control mechanism has been put in place. That means nobody can just apply for a loan any amount and they will just get it like that. That if no, it is a weakness. Oh, I'm just giving an example of how. So let's go to the second. Now, you may be asked in the exam to also draw an internal control questionnaire. You may be asked to draw an internal control questionnaire, please. You may be asked in the exam. So you can see that now. So let's move to the second types of questionnaire now. We have what we call internal control evaluation questionnaire. Internal control questionnaire now. Don't forget that I told you that internal control questionnaire now is used to what? To establish whether a control exists. Whether a control exists, and that control is meeting the control objective for the organization now. But let's look at the control internal control evaluation questionnaire now. Now this questionnaire is to draw up a small number of key control questions. A small number of key control questions now. Am I communicating? And this questionnaire is designed now, it is designed to establish major weaknesses. You know, internal control questionnaire now is used to establish whether a control exists in an organization, and that control that exists, is it meeting the control objective. But the internal control evaluation questionnaire now is designed in a way to establish major weaknesses in the internal control system. So you may be asked in the exam to state the differences between internal control questionnaire and internal control evaluation questionnaire now. Please, these are the major differences in it now. Don't forget that ICEQ is shorter. I told you it's shorter. It's not long. It's shorter. Now, it's shorter list of questions. Why this one is much longer in list of questions now. Am I communicating now? So these are the types of questionnaire that we have now. Are we together now? What's the time? So let's quickly look at evaluation of control and audit risk assessment. Evaluation of control and audit risk assessment now. Evaluation of control and audit risk assessment. Now, I think I've explained this now, but I'll still explain it now. That for an auditor to say that he wants to rely on the internal control now, he will need to carry out an evaluation. And in carrying out that evaluation, he needs to know whether the control is strong. That means if an auditor now wants to use an approach, let's say system, I've explained it earlier, system-based approach now. System-based approach is when the auditor rely on the work of the internal control now. That means the auditor have an assumption that if the internal control in the organization is strong, is effective, that means the transaction that will be properly recorded and will be properly processed now will be properly processed in the organization now. And if it's properly recorded, if transactions are properly recorded and are properly accounted for now, that means there won't be risks in the financial statements now. there won't be risk in the financial statement, and the control risk will be lower. And if the control risk is lower, the audit risk will also be what? Will be lower now. That means the auditor now, before relying on the work of the internal control, he needs to evaluate the internal control that has been put in place in that organization to know whether he can rely on the internal control system now, or the internal control system. Now, if the internal control may look well, may actually look effective on the paper now, maybe when assessing it now, it may look well in the paper now, the auditor will need to properly what? We need to carry out a test to show that that control now that the organization say they have put in place, is it properly what? Is that control, is it effective? Is it an effective control? If it is not effective, that means the auditor cannot use audit-based approach. Audit-based approach can be used when this control mechanism that has been put in place by the management is effective or strong. If it is not strong, if the control, the internal control mechanism or system is not strong, the auditor cannot use system-based approach now. That means what he will use is substantive test approach. And substantive, I told us that substantive test approach, substantive testing approach is when the auditor tests large amount of transaction in the organization, in the financial statement. That means majority of the transaction or majority of the item in the financial statement are being tested, so that he will know that there is no material misstatement in those transactions now. Now, evaluation processes now. Evaluation processes. I will explain the evaluation processes again. This is how an auditor evaluate the control mechanism in place. I will explain. The auditor will need to evaluate whether the control mechanism that has been put in place in that organization, is it weak or strong. If it's weak, the auditor will go straight to substantive for testing if it's weak. But if it is strong, the auditor will need to carry out test of control to be sure. In evaluating it now, if the evaluation may be on paper, maybe, or during the planning stage now, looking at the internal control on paper, what are the organization putting in place? You look at it, now evaluate that this internal control that the organization has put in place is weak. So if it's weak, what will it carry out now? Substantive testing now, automatically. Now, if it's strong, it will not just say, because it's strong on paper, or because I've looked at it, the internal control that the organization is put in place is strong. No, you will need to do what we call carry out test of control. Testing the control that the organization say they have put in place now. Testing it, is it truly what they say that is on paper that they are truly what carrying out now? So if it is now, if that after carrying out the test of control, you now discover that the system is weak, he will go and do substantive testing. But if after carrying out the test of control now, the auditor is able to observe that the internal control that is strong. Is strong. That means it will now carry out what we call system-based approach. And system-based approach is you testing some item in the financial statement, not carrying out maybe small population or small sample of the item in the financial statement now. That means it is substantive testing, but it is less, it will do less substantive testing. And that's how the that's how the auditor carry out the evaluation processes of the internal control mechanism now. So let's go to what we call management letter. What is management letter? Management letter is a report. Is a report. Is a report. Is a report that will be in a column fashion, and that column is that report will give an details about the weaknesses that the auditor has actually observed in the client system, of internal control now. Don't forget, this is a report presented in a column format of column fashion, providing details of the weaknesses that have been observed in the internal control of the organization. And this is typically what prepare so it is prepared by the auditors to the management now, and that's why it's called management letter. That's why it's called management letter now. Any questions so far?